Well, my friends, if you've been asking questions around mortgage, what rate cuts are going to be coming in, or should I get a fixed or variable? I've gone to get my friend. He's an expert in the industry, Alan, and welcome to the show.
Thanks, John. Thanks for having me. I appreciate it.
Thanks for coming in.
You're welcome.
So I'm a newbie. I need to purchase a home.
Okay.
I have zero knowledge about mortgage.
All right.
How would you explain that to me, please?
Well, okay, the mortgages are a standard in the Canadian real estate. You need, unless you're going to buy the home cash, you're going to need basically a big loan called a mortgage. Okay, the bank will lend it to you on on some criterias, like your debt servicing, your credit worthiness, and they'll do credit checks, or the mortgage broker would do the credit check, right? And depending on your income and other qualifications, then the lender, the bank institution, will say, okay, Sean, this is what you would qualify for. Okay, so basically it's like a big loan securitized by the real estate that you're purchasing.
Okay, so basically it takes my income, my credit score,
yes,
and that gets the mortgage broker to know how much I can afford to borrow, right?
That's right.
Okay, that's right. Great.
That's right. And a rough estimate, Sean, for qualification, if you just want to know what you can qualify for, is you take your qualified confirmed income and multiply it by 4 to 4.5. Okay, that's a rough estimate, because depending on the debt load, maybe you have outside debt or a car loan or a student loan, that doesn't include that in that, multiply by 4.5. So, but that's a good rough estimate of what type of mortgage or amount of mortgage you can qualify for.
Awesome. So let's say I make 100,000.
Okay.
Then the mortgage I could qualify for is between 400 and 500,000.
That's right, roughly around there. Yeah, that's a good rough and dirty number. That's right.
All right. So now I come to you to get a mortgage.
Okay.
What are the terms I could get?
As in the terms from 1 to 5, is that right?
Yes, the terms from 1 to 5, yes.
Okay. So right now, if I was getting into the mortgage market, I would choose a 3-year. You can get anywhere between a 1 to a 5 or even a variable, right? But just seeing where the landscape is in the financial field and what the Bank of Canada is going to be doing and where the bond yields are right now, I would think if you're just getting into the market right now, Sean, a 3-year is probably the ideal way to go. 1 or 2-year term right now is pretty expensive. Okay. I mean, low 7s for a 1, high 6s for a 2. Okay. 3, you can probably get it in, I would say, in the mid 5s. Okay. And what that does, Sean, it gives the market, right? Bank of Canada, the bonds,
right,
to come back down. Right. So let's say in 3 years, the rates are lower, and then you want to take advantage of that lower rate when you renew your mortgage. So you can choose from 1 to 5 or a variable. But right now, I would say if I was getting in, I would choose the 3-year term.
The 3-year.
Absolutely.
Okay. So that it benefits you down the road, right? Once the interest rate goes down for you to renew. Okay.
Absolutely.
That's cool. So you mentioned variable, and I know there's another one called fixed.
That's right.
What are the difference between those?
Good question. So the fixed rates are determined by the term. So 1-year term, you get a specific fixed rate that doesn't change for that 1 year. Okay. 5 years, you have that 5-year rate for 5 years, doesn't change no matter what happens in the landscape, right? So it gives you a little more security. Right?
Absolutely.
We're Canadians and we like security, right?
Yes, so that's right.
So that's why most of the times the fixed rates are very appealing. Okay, but the variable goes by the overnight lending rate, which is governed by the Bank of Canada. That's a little bit more risky, but it's a calculated risk. If you have ice in your veins and you don't mind it adjusting, okay, you can, prior to the rate increases where the prime has, I believe, moved up 425 basis points in the last few years, I was a big proponent of the variable mortgage. I've been in the industry for about 20 years, right, John? So a long time.
Yes.
Okay. So the variable mortgage, I've always promoted that. Always saved money. I think they say about 80% of the times you save money on the variable. Okay. But at that time, the prime rate was low or lower than now. Okay. Right. And the discount was really good. So there's two components in the variable. You have the prime rate, okay, and then the discount. So back in the past, your prime rate, it was prime minus, let's say, prime minus 1.
Okay.
Okay. I think the lowest it ever got down to with the discount was, I believe, in the low 2s, right? Really good. Really good. But now, since the cost of short-term funds is very expensive, the increase of the prime rate, so instead of the prime being 3.25 minus 1, 2.25, okay, your prime, it is at 7.2, right? Minus the 1, but instead of being 1 now, Sean, it's like minus 0.5. So it's a double dip. You get the higher prime, right? And the lower discount, right? So if you're going in right now, I wouldn't really choose a variable mortgage.
So that's why some variables go higher than fixed, right?
Right.
Because I had some clients, they were paying, I think, about $1,800 when they got their mortgage. That was back in, I think, 2021.
2021.
And now they're paying about $4,000. So, which is...
not fun.
Not fun at all.
Not fun at all.
So you mentioned rate cuts, right? So there's been tons of questions around rate cuts. When are they coming? When do we expect them to actually happen?
Okay. I don't have a crystal ball, so you can't hold it to me.
Definitely.
All right? But we've had stats upon data coming out that we should see an increase. We should see a overnight prime rate decrease by summertime. So we're probably looking June, July. In fact, we just had, I believe, last Wednesday's, the inflation numbers came out, and I believe it hit, what was it here? I believe 2. It hit 2.9 versus 3.4 for December, right? So that's further evidence that the quantitative tightening should ease up, right? So we should see, hopefully, fingers crossed, that we would get a rate reduction by June, July.
June, July. Okay. Now that you mentioned the inflation rate, right?
Yes.
I'm looking to get into the market to purchase a home, but looking at the inflation rate coming down.
Okay.
And then looking at maybe expecting rate cuts by June, July.
Okay.
What do you think I should be doing at this time? Should I just wait and expect that rate cut, or probably with the way things are looking right now, should I just say, okay, if I could get 3 years of fixed, should I get it now? And then by the time I renew, favors me, right?
Absolutely. Those are all speculations of when they're thinking about the rate cuts, right?
Right.
And the government never wants to be tied down to anything, right? Tiff Macklem, he's always said, if things change, we're going to shift and move the goalposts. So fingers crossed, summertime. But if something changes, maybe our inflation numbers, our data comes in above expected, they might move it to fall. So what I always say is, if you can get a good rate, right, get it now. Don't expect it to change on time every time, right? Because things can change, and the government
definitely
will always err on the side of caution.
And even right now, we've been seeing there's been some multiple offers going on, because I guess people are actually tired waiting for this rate cut, right?
Absolutely.
So they came out, and it seems the market is kind of picking up.
It is.
It's getting busy, open houses everywhere, right?
You're right. Multiple offers.
Yeah, and from my experience as a real estate agent, springtime is always a hot time for the market.
It's a great time.
So now if people go into the market, even without the rate cuts, and prices are going up, right? Because we saw that home sales in January jumped 22% compared to last year, January, and in pricing, right, 7.6% higher. So if this keeps going on into the spring, right?
Yeah.
I wonder what is going to happen with the summertime when the rate actually comes down, probably even if it's 0.25 basis, right? So,
absolutely.
Yeah, I was going to ask you too, what is the relationship between the bond yield and mortgage?
Oh, great question. Great question. So the bond yields is where we get the mortgage funds, dictates the mortgage rates.
Okay.
Okay. So the bond market, if there's lots of funds in the bond market, okay, the yields are smaller, right? So to attract investors, the yield is smaller,
okay,
right? So which is good because then our fixed rates are lower, okay. If there's less bonds in the market and they have to attract investors, they have to increase the yields. So inversely, they would have to increase the fixed rates as well.
Fixed rates, okay.
Okay. So come on, bonds, right?
Yeah, come on, bonds.
Right.
So I've known that I have a few clients, right, looking to purchase pre-sales.
Yes.
And as we know, everybody that purchases any new thing in Canada pays GST, right?
Right.
But these are the things they probably don't know. They see, oh, this two bed is $500,000 with this much square footage. They have that number in their mind and be like, okay, I'm only paying $500,000.
Right.
But at the end of the day, when they look at the paperwork, right, the statements of adjustment, they see that they have to pay GST.
They do.
Can the GST be worked into the mortgage when people are purchasing pre-sale?
Great question. The GST can be worked in. Okay. In fact, there was the new budget that just came out, and we can touch about that a little bit later on, but the GST can be worked in. What can't be worked in, Sean, is the property transfer tax.
Oh, okay.
Okay, and we'll touch base on that. The property transfer tax is a separate entity that the buyer over a threshold will have to pay towards their closing costs.
So, that being said, right?
Mm-hmm.
We got some news of some exemptions.
Yes.
Do you want to touch on that?
Yeah, exactly. Very, very exciting, good news. It came out late Thursday night that the budget for 2024 by the BC government came out, and right now, if you bought a first-time home buyer, qualifying first-time home buyer, bought a place $500,000 or less, they don't pay PTT. The property transfer tax is exempt, so which is great, right? Saves them like $8,000. Right. A lot of money, right?
Yeah.
Now, but what can you get for $500,000 right now when you're a first-time home buyer? Not much.
So probably one bed.
Yeah, exactly, right? So it has to be very specific, but as you know, as you mentioned, our prices have gone up, right? So what the good initiative is, the government has increased that value from 500 to 835. Okay. It's on a scale though. They sort of scaled it back where the first 500 is exempt. Okay.
Zero, right?
It's zero.
Okay.
Okay. So which is good. And then the remainder purchase price up to 835, which is 335. Then that 335, they have to pay tax on that. Okay. So I worked out the numbers. As of now, if you bought a home of 835 today, okay, prior to April 1st, the PTT is 14,700.
Right.
A lot of money.
Of course.
Right. Okay. But if you bought that same home valued at 835, that the PTT is 6,700. Okay. So that's a good savings of $8,000. Okay?
Right.
Yeah.
So that's after April 1st, right?
That's correct.
Okay.
April 1st.
Oh.
So hopefully it's not an April Fool's joke, right? Right?
Absolutely.
Right?
Yeah.
Yeah.
And hopefully it's not a target for homeowners to like, okay, I know you're saving here. I'm going to bump up my price, right?
Yeah, exactly. Exactly.
Wow. Okay. So thank you for shedding the light on that, right?
You're welcome.
And some people say when they want to renew, they get offers, probably better offers from a different bank. And they be like, okay, I'm just going to break my mortgage with this bank.
Right.
Are there any fees for doing those?
If they break their mortgage prior to their renewal, Sean, yes, there would be what they call a 3-month, depending on the product. So if it's a variable, it's 3-month interest only penalty. Okay. If it's a fix, it's the interest rate differential, which is calculated. Banks generally set their interest rate differential a little bit different. Some take the contract rate minus the discount to what the term is, and then how much mortgage they have remaining. Okay, and then they calculate what is lost. Okay, ideally, 3-month interest is easier to swallow because it's just 3-month interest, which could be $5,000, $6,000, depending on the size of the mortgage and the interest rate, of course. But the horror stories that you hear where if they break their penalty, it's like $10,000, $15,000, $20,000. And that penalty is generally interest rate differential.
Okay.
Right? The only time I would recommend breaking a penalty is if you can have savings. I've done it before where the mortgage market, the interest rate was so much lower where I had a client before, we broke his term of his mortgage. Okay. It was $11,000. Still quite a bit. Right. But the interest savings was a total of, I believe, like $18,000. So his net savings was $7,000. Right. So that would make sense. Right. So your mortgage broker would have to figure that out for you. Right. It doesn't make sense to break the existing term to get to pay the penalty, but do you make it up on the back end? Right. So that's something that a good mortgage broker can figure out for you.
Absolutely. Speaking about a good mortgage broker, right? You've been with CMAC for a long time and all that.
Yeah.
I've had some people, right? They go to a mortgage broker, a mortgage lender or something. They say, okay, check my credit. I'm purchasing this home, right? They do that and they got the confidence that, okay, I could go for it.
Yes.
But prior to closing, they get a notification and be like, hey, you're not actually qualified.
Right.
Is there anything between those points that you could shed some light on?
Yeah. It's going to be depending on who you work with.
Okay.
Right. That's the biggest thing. I've been in the industry for about 20 years. I hang my license with Invis. Right. I work with majority of the major lenders out there, about 45 different lenders. Right. The process of the pre-approval, Sean, is quite standard. Right. Checking on the income, doing the credit, doing the credit check. Right. And making sure the debt servicing ratios are in line. Right. So if your clients are working with a good mortgage broker, there shouldn't be any surprises. Right. There should be, these are your numbers. These are the documents that we need. Job letter, pay stub, 90-day history of funds and account to confirm down payment. Right. It shouldn't be 11th hour. Oh no, you're not approved yet. And then you're scrambling. Right. Which is not good. Right.
Absolutely.
Not cool. So it's going to be dependent on the client's broker they use. But if they are worth their salt, there shouldn't be any surprises to that.
So that's why you should be working with a broker with great experience, right?
Yeah.
Absolutely. So let's say you did a pre-approval for me and everything, right? I put an offer gets accepted, and closing is coming in 3 months.
Okay.
Are there some things you're going to advise me, hey, Sean, don't touch this, don't do this prior to your close completion?
The one thing that I always say is keep your information status quo, right? Meaning your job, make sure you're there. Don't lose it, right? Okay. Don't buy that Porsche, okay?
Absolutely.
Don't get your debt load way way more than it was at the time of the application, right? Generally, though, once the lender has looked at your application, okay, and has given you the formal approval, okay, they generally don't come back and ask for more information. Okay, the only time they might is if your completion date has been pushed back 2, 3, 4 months. Okay, then they might ask for, hey, is Sean still working? Let's pull it. Can we see his credit bureau again? Is he still, does he still have this amount of debt? Right. So as long as we can get everything confirmed, approved, and it completes within that time frame, we should be okay. Okay. When I say should, I'm saying like 99.3%. Okay. But I always say, don't buy that Porsche yet, man. Hold back.
Hold back till you're completed. Right?
Yeah, exactly. Then fill your boots.
Cool.
All right.
And one question is, people, right, generally, they think, okay, if I'm getting like $500,000 mortgage, that's all I'm getting, right?
Okay.
Are there any costs to getting a mortgage?
Well, there will be your completion costs, okay, which would be property transfer tax, which we touched on. There'll be legal fees. I would say within $1,000 to $1,500 for your legal fees.
Right.
Appraisal fee, if the institution, the lender requires an appraisal, $300, $350. Okay, and then there's legal disbursements, and legal disbursements is disbursements of, let's say, the vendor has already paid the property taxes for the whole year.
Right.
Right. You have to reimburse them those days that he's not occupying, like property taxes, utilities, things like that. Okay.
Yeah.
So that ranges anywhere between, again, depending on the home, $1,500 to $3,500.
Okay, cool.
Right.
Yeah. So I think we got quite a bit done with residentials, right? Do you do anything commercial?
I don't, but I have a partner that does commercial, and commercial is a separate beast.
It's a total different thing.
It's a separate animal,
right?
Exactly. Residential, I'm your guy.
All right. Yeah. So tell us a little bit about yourself. Like, all we've had on this podcast is you got 20 years under your belt, right?
Long time.
So how did you get started with mortgage? And
Sure. That's great. Good story. I was probably in my mid-20s. All right. I sort of knew I wanted to become a broker. I started with household finance. But I was like, okay, I'm in my mid-20s. Don't really know about mortgages, but I talk fast, long hair. People aren't going to listen to it.
Yeah.
Listen to me, right? So one of my old bosses from household finance, he moved to Canada Trust when it was still Canada Trust back in the early 2000s, right? He said, Alan, are you open to doing anything else? I said, absolutely. He said, Canada Trust and Bentall 4 downtown, our underwriting department is looking to hire. Are you interested? Absolutely, right? And Sean, looking back at it, it's probably been one of the best things for my career because I actually had to learn the back end of the mortgage business, right? When I was an underwriter, I'm looking at the file. Does that make sense? Is the credit good? Are the debt servicing ratios, within reason? Can I have an opportunity to make an exception, right? So I had to learn first time home buyers program, deal with CMHC, Genworth back in the day. It was really, really good. I did that for about 4 years. Underwrote about 1,000 files. So it taught me how to see the deal, right? See if there's a way we can make it work. It was actually really good because it was back, I started in 2003. Okay. It was more common sense lending back then. All right. Right now it's a little bit more structured, right? Where, yeah, sure, you can make some exceptions, but it has to fit within the box.
Okay.
Right. But yeah, I was underwrote for about 4 years, did well. And then I became internal sales force for TD Canada Trust, did that for 4 years. And then the meltdown happened in 07, 08, right? And I was like, okay, it's a little bit slower. What am I going to do? I said, okay, it's time to get my license. So I got my license and been hanging my license since February 2008 with Invis. So I'm independent with them for over 17 years. It's been great.
Wow.
It's been a wild ride.
A wild ride. So one thing I picked up from there, right?
Okay.
People out there might not understand an underwriter becoming a mortgage broker and all that. Like for me, I know like if I bring a client to someone, if I have to bring them, I have to take them to a mortgage broker. They put the file together and everything and send it to an underwriter, right?
Yes.
So as an underwriter, what do you look for in the file before you say, okay, this is good to go?
Well, it's standard practice as an underwriter and for a broker too, because you got to put that deal, purchase, refinance together, right?
Right.
Does it debt service? Is there income within matrix, right? Is that, if they're self-employed, you need 2-year history on your notice of assessment income.
Okay.
Okay. So things like that, maybe a new broker might not know or less experienced broker would not know. Maybe you can gross up the income. So a lot of the experience that I had as an underwriter, it helps me tremendously as a broker right now.
Right.
Because within, a few hours and within an hour, I have your client's information here, Sean. I can tell you, yeah, this can work. We can do it. Or Sean, we need to do this to make it work, right? Maybe we can add more income by a cosigner, or we need more down payment, right? Something like that. I know real quick, right? Polling the credit bureau. If the beacon score is good, over 680, 720, excellent. Right? We can work with that, right? Making sure the income that we use is confirmed matrix income, right? Yeah, so it's something that I because I've done it in the past as an underwriter and also a broker for this long, that I know what to put together.
Yeah, so to me, it looks like getting 2 for 1, right? Because with your vast experience with underwriting, you could look at a file and be like, okay, here's what we could do. It probably take you maybe max 2 days, 3 days, instead of waiting for like 5 days for, okay.
A couple of weeks or so.
Yeah.
Absolutely.
This mortgage broker had to talk to the underwriter, get back to you and all that. Like with your experience underwriting, you could definitely check things out and be like, okay, this could work. Here's the things we could do to make it better. Yeah.
Absolutely.
I really love that. So as for me too, right, I really love my clients to deal with me or whoever is going to be in the team I'm working with, right? And be happy at the end of the day, because I've seen some bad mortgages written.
You're right.
And as a real estate agent too, I really learn from my clients, learn from people what is happening out there, right? So I could direct my clients to the, best way to ease the transition.
And the pressures, right?
Yeah, the pressure, the questions, frustrations. Oh my God.
Absolutely. And that's a big thing. Right? This is their biggest purchase.
Of course.
You're not buying socks.
In most cases,
right?
Yeah.
You're buying,
probably the biggest thing of their life.
Yeah, if it's a first-time home buyer,
yeah,
right? It's a big purchase.
Yeah, especially the first-time home buyer. I like to bring myself to wherever they are, and then we grow together, right? Because everybody's unique.
Oh, absolutely.
You can't just do a cookie-cutter thing to them, right?
Yeah, it's not carte blanche.
Yeah.
Everybody has their own personalities, right?
Of course.
So that's why for me, I know the communication piece as a mortgage broker to your client is imperative. Right. Making sure they know the process, they're aware of the process, and why we're doing things. Of course, I'm not going to bog them down with information, but pertinent information to that point is something that I will make sure they know. And then they decide what they choose, depending if a term, mortgage amount, making sure they're happy with the whole transaction.
Awesome. And I'm a living proof of that too, because before I got to know about the property transfer tax exemption, you sent it to me like, hey, Sean, here's what is going on.
Absolutely.
And the other numbers that came down, the inflation rate numbers.
Yes.
You sent it to me first as well. So
excellent.
I was looking at it like, okay, if you giving me this information, those are a really great information for me to be able to make an informed decision, right? If I was going to purchase a home today.
Absolutely.
Yeah, so it will be great working with you.
I'm looking forward to it.
Definitely. So your information is going to be on the show notes.
Excellent.
And sometimes people will call you.
That'd be great.
Link with you, right?
Right on.
Thank you so much for coming to the show, Alan.
Thanks, Sean. Appreciate your time.
It's been great having you here. And hopefully we're going to have you back again some other time.
Looking forward to it.